Hey guys, how's everybody doing this morning? About 9:30 here in Austin, so 10:30 in New York. Market's been open about an hour. It's bouncing a little bit. It was. Let's just check it out. With the Qs that had this, they were cutting their low. Jackson, knock it off. They were undercutting their low by a long way, but now they're bouncing. And what's important about, well, they were bouncing. They were bouncing. Now they're back to about where they started. We'll see what happens. We'll see what happens. Now, Jackson, what are you doing? Okay, this is what I'd be watching. Trades 5 days a week, 23 hours a day. So, but this just trades during business hours. So what is obviously concerning in the Qs is this right here. Left behind between Friday's close and this morning. So the longer that stays in effect, the more in effect since early March. There were still sellers there the other day. The longer it stays there without going through. But before the end of the day, if there's some kind of rally and before the end of the day, they filled this gap, they're on the other side of it. I'll take it off the chart. Anyway, but the main thing to look at on the chart, my SPY chart probably says it best. It was just a classic. Classic, unfortunately, set up for bears on the SPY chart. Well, maybe it was on the SPY chart. Oh, no, it was. I see it there. Oh, my gosh. Golly. Sorry about that, guys. Hope everyone had a good weekend. I updated the LFGY and the Altiverse. I have all new stuff in there. I'm looking forward to showing it to you guys. Okay, I made an Orange Man bad box, or not really bad, but it's bad if we're on this side of it. In other words, it represents overhead supply. When we were trading on the other side of this box where it's orange, it's just the election night gap. It was actually support turns into resistance. It happens all the time. There's been a jillion books written about it. But same thing with the SPY. First thing, we need to be more positive. I won't even put it on the SPY chart. I won't put it there yet. But if we could get through this morning's gap, that'd be awesome. That would be awesome. The other problem with this morning's gap is there's a gap from that was 2 weeks ago at the last bottom. And anyway, we expected buyers to be there. That one's no longer affecting us. This one down here, well, 540, hopefully, if not 510, if not 500. So anyway, all right, here's Russell. Now, Russell looks the most bullish. It's hard to see. I'm sorry, these charts, but I can see it. It looks like Russell's actually in the gap. They've rejected it. It looks like Russell's rejected the low. It'd be bullish. The bulls would really like to invalidate this gap. It could even be, I mean, it could even start a little rally here, because lots of times you just to start a rally, you just have to undercut the last low. Well, we undercut the last low this morning. I mean, who knows? I mean, who knows if we've undercut the last low enough, but we'll keep an eye on it. All right, so chart right here. Yeah, well, no, it's still S&P still grinding. We're still right where we opened on the S&P. We've had a bullish rejection tail in the first half hour and a bearish rejection tail. We're just grinding. Now Bitcoin is mounting a rally. That's good. That's good. I know where Bitcoin's trying. Bitcoin go back to fall back into mean right here, most likely. Now it doesn't mean it has to stay there, but I bet you that's where it's going. I bet you they're at least going to check mean. If we get on the other side of mean, though, I mean, then that would be a good thing for the bulls, right? And I'm talking mean in the time frame I follow, which is 30 minutes. All right, let's look at some other stuff. I guess let's look at yield max. So this is my model portfolio, but let's just see how everything's doing. So YQQQ is up 1.59% today. Okay, GPTY is down 2.8. That's great. ULTY is down 2.7. Great job, guys. Even GDXY is down a little bit today. We didn't look at gold. Maybe we should go back and look at gold. It looks like Zomo is unchanged, but Fiat and dips are up, and we would expect that because that's inverse tech stocks, inverse Coinbase, inverse NVIDIA. And there's no way YSPY is up but 1.5%. Anyway, let's go look at something else. That was maybe a bad idea to look at that first. Well, but let's look at the bottom line. I like the bottom line because it says I'm only down 57 cents, 57 basis points, in other words. And whereas if I was in an index fund, I'd be down twice that much, or even a 60-40 SPY bond portfolio is down about the same. So I like that just from a risk management perspective. But I suspect some of these prices might be still. I wouldn't think YSPY would be up 1.5. Anyway, it's fine. It's whatever. Let's just look at YSPY though. You guys don't realize these ones that pay dividends weekly, they're such a pain because your spreadsheets before on the monthly paying ones were only messed up one day out of the month. When they declared a dividend, but it wasn't yet reflected in the price. But nowadays it's one day a week, and that's probably all this is. There's no telling. I guess I need to get some better technology. But yeah, they paid a dividend, $1 a day. I heard about this last week. They declared it last week, but it was paid today. So who knows? Well, who knows? So that I do know what happened. So I'm trying to think. Yeah, it's not. Anyway, it's down as you would expect because it opened at 25 and they picked a great time to start a triple leverage SPY fund, didn't they? I mean, let's overlay a chart of the SPY on top of it. The time that there's the SPY over the same time period. When they, I mean, it has not been great timing. All right. Well, anyway, let's look at some other stuff. All right. Here's the different verses. Let's go over here to ALT-T. Now, I noticed something about ALT-T. They have one stock that he doesn't have. Let me find it again. Yeah, Arista Networks, no stock, just options. I mean, I love that. I don't know why he doesn't do this on all of them. And I don't know because I haven't been following this every day. Maybe they had stock, but they were called away on their stock, and they still have the option position. Well, no, but they would still have the option. They would still have the short option position. Right here, they're short 750. I think maybe this goes out till April 4th. So let's see what he's doing here. He's long, Jay's long the 80 and a call. So he's long an 80 call. It doesn't matter what company it is, but just say, because Ariston Networks, I don't have their current price, but let's say it's 80. He's long the 80 call, and then he's short the 84 call. So he's done a covered call. He's selling a call on another call. It's that there's poor man's covered calls, and then you could even do this. This is just a spread. But it has a similar effect as a covered call. And guess what? You don't have to have the stock. You still get still a credit trade. You still get the theta decay. Now it has some disadvantages too. But guess what? One of the disadvantages is you don't have to worry about holding the bag. It doesn't matter how much this thing's down. It doesn't matter if it's down. It doesn't matter if it's down, 50% tomorrow, because all you do is you have a call. Yeah, all you can lose is what you have in it. It's the greatest trade ever, and I don't know why he doesn't do it. Not only that, this trade is also, you don't have to have stock. This trade is still considered synthetically a caller. A call spread is also a synthetic caller. Anyway, all right. But on the rest of them, it's business as normal. He has stock plus a traditional caller. So he has stock, and then they sell an out of the money call, use part of the money from the out of the money call to buy a put, usually under the price of the stock, but so it limits their loss to, maybe 5-10%. It depends on how far out they have to go. It depends on how volatile the stock is. Anyway, okay, so but I think it's cool that he has Ariston Networks without having any stock, because stock will hold you back. I mean, okay, so that's a long way of saying, so here's the holdings. Well, Ariston Networks isn't considered on the holdings. These are just the stock holdings, and that's always the way I've always shown it, because usually they always have stock. But occasionally, there was one other time there was a company where he just had the options. Anyway, okay. But here's the actual weightings of everything. Now, the cash, he's fully invested here. He has no cash. I mean, very little cash. 0.016. Okay, now, let me see where the Altiverse is. I updated it too. Or maybe not. I don't know. You never know with me. I thought I did. Okay. Well, anyway, we'll do it right now. We'll just go grab it like this, and then we'll say insert chart. Okay. Voila, the Altiverse. Okay, so this is actually, gosh darn it. That's the weightings. That's not the verse. Gosh darn it. All right. Well, I guess let's just look at this. That's the weightings. All right. I guess we don't have an Altiverse this morning. That's fine. Let's go to the LFGY verse. Here's the LFGY verse. So you can see the average LFGY itself is down 2.8%. The average constituent in LFGY is down 3.3%. So they're showing a little bit of buffer. Riot Blockchain and Hut, I think it's Hut 8. Only things that are up this morning. Everything else is down. Sorry about the Altiverse. I thought I could have sworn I could have sworn it was on here somewhere. Maybe it was over here. I don't know. Anyway, I bet if we did have the Altiverse, it'd probably be depressing. All right, let's go look at the GPGY verse. So these are new weightings for, well, actually, back to LFGY real quick. LFGY, I wanted to show you guys that has negative cash right now. So I don't know if they bounced a check, but I'm sure it's no big deal. But anyway, for what it's worth, they're in other words, they're fully invested. They're more than fully invested. They owe somebody a little bit of money, actually. Their biggest position is MicroStrategies at nearly 20%. Second biggest position is Coinbase. So, you know what did pick a great time to come out is the YieldMax Fund WNTR Winter, and it's inverse MicroStrategies. Now that thing picked a good time to come out. Anyway, okay, I just want to show that. Now on to GPTY. So GPTY does have a little cash in the bank. They aren't fully invested, but they have 1.4%. Their biggest positions are AI and in NVIDIA. Okay, and boy, NVIDIA's Nasdaq's down 1.8%. It's bouncing. It was down more than 2 this morning. All right, well, here's the GPTY verse right here. Now, this is ugly. GPTY down 2.8, the average stock down 2.7. Everything's down. Everything's down except for IBM and Apple. Everything else is down. All right, so let's look at the index buffer report, maybe. We'll check out the YieldMax buffer report. Boy, that's ugly. Look at old Murray. They were just saying on CNBC today that the vaccine companies were down more, or some were down. And I'm thinking, how can some of them be down anymore? But like Moderna, it's almost hard to fathom. But I guess the guy at the head vaccine guy quit. Kennedy forced the head vaccine guy out, or who knows? Anyway. Yeah, they're all. I guess every one of them selling off. Anyway, but it's even the stocks that are the good ones that are the Trump approved on the Trump approved list, like Planeteer or whatever, Tesla. They're all getting hit. All right, index buffer report. Oh my gosh, that is ugly. Well, let's see what's down the most in Spyland. I think Feed and 5E, right? Yeah, Feed and 5E down 1.3, where the market's just down. It's about 30% more volatility than the market today. Whereas SPY-T's down as much as the market. That's not great. Why is SPY's down as much as the market? At least it's not leading the market on the way down. XDT is down slightly more than the market, as is SDTY, and that makes sense because they do the same strategy. All right, Feed and 5E down. SVOL, it's not going to be a good day for SVOL or ZVOL. They're both leading. Then over here, this is going to be CEPI and LFGY and GPTY and all of these guys. Of course, they're leading on the way down. So is AIPI. So is even YieldMax and YieldMax. Of course, they're leading on the way down. And of course, Alti is. But the worst one on the board today is old CEPI. All right. XOVR is even down. What's up? Is anything up? TLTW is up. USOY is up. Other than that, it is slim pickings. It is definitely slim pickings. SB, yeah, I hear you. Unfortunately. Hey, Retire, good morning. And Norman, good morning to you. Yeah, it's support's being tested, but when I was making the video and trying to update my spreadsheet, I don't know what happened to the ULTY. But anyway, the market was the NASDAQ especially was just getting crushed. I was trying to get the report ready really quick. I didn't want you guys to think I was taking the day off and the NASDAQ's getting crushed. And then by the time I get the report somewhat ready, I get in here and I look and the NASDAQ's bouncing. In fact, let's look at the Russell and see if the Russell's still. At some point, that's at some point a rally will happen. And usually that's what happens in bear markets. They undercut the low. Now it's usually by more than just a teeny bit. I would expect, lower for a couple of days, go down there to that 540 level, make support, put in a higher low, get the bulls excited, maybe even a couple of times, rally up to some other previous key area, and then if it's a true bear market, then that'll be the place to sell again. But anyway, we'll see how it handles this gap this morning. All right. Well, this is a daily chart of the Russell. Let's get a short term. Let's get like a 5-minute chart of the Russell and kind of see what's really happening. Well, I mean, it's trying to, it's in the gap from this morning. The bulls are fighting, but they have a ways to go. And even if they do fight their way through that gap and get back in here to balance, there's a balance area at 200 for sure. Then there's huge overhead resistance over them, 201 and stuff. So, but that would be better to be up there, and we take it one day at a time, bulls. But the bulls are in trouble right now on the time frame I follow. I had one video last week, one option video, because I didn't do any earnings videos. I don't think. I had one video last week, and it was on Wednesday. It was called "How to Call BS on the Rally" or something. Well, anyway, those, if you have any of those on, I didn't think anyone did those, but I talked to somebody today that did a couple of those. Look how well this one worked out. Man, I love these types of trades. Well, anyway, okay, so let me show you. But a lot of these expired today. They were like this one. See, this one's probably overshot. I wanted to look at this one. So this one was aiming for 478 on the Qs, and it expires in 5 hours. It was a long put fly. So yeah, and sure enough, it overshot. It's into the bonus territory. I hate when that happens, but that's the reason I don't do equidistant flies, because I hate losing on both sides. I just pick a side. Usually I pick against, with the trend, or go, you know what I'm saying. Depends on what the instrument is and depends on what I'm trying to hit. So anyway, that was an example of it's a butterfly, but getting into the bonus, the consolation prize. It's whatever. It's whatever. I talked to some people that did some of these. I don't know which ones they did, but look at some of these ones that says buy more time, less risky, bearish YOLO. Even the less risky ones. So anyway, if you did do one of those, let's talk about that. And right now, where you are, there's no more advantage in the trade. You've made all the money you could make. I mean, here's your profit and loss graph now. Here's your profit and loss graph at expiration. You need to get out of this, take your profit, and if you want to, reestablish a 3-leg. So in other words, move the flat spot over here and give yourself a buffer, but take this, because look at this trade. This trade was a credit trade. Max loss is only $400, and it's up more than $1,000. If anyone did this, for sure, take this off. You should have taken it off Friday, probably, but anyway, this is fine. Take it off now. Take the $1,000 and go invest another $400 or $500, just like you did this last time. Create a buffer. It's easy peasy. If the market keeps going, you're in as long as it keeps going. If it stagnates, that's fine too, because hopefully if it doesn't move too far up anyway. But anyway, yeah, if you have that trade on, take that off. That is a winner. And those 3 legs that's what a 3-leg is good for. It's good for a person that knows they need to sell premium, because that's the smart thing to do. But at the same time, they don't want everyone else to be talking about how they YOLO puts and they're, you don't want, I mean, that's my theory anyway. I just hate FOMO. It's an anti-FOMO trade. But if the market wouldn't have just crashed, you would have been fine too, because it would have just stayed where it was. You would have made $99 on $400 risk. That's 25% for a week. That's fine too. If it would have gone up, that sucks. You'd have lost money. But of course, that happens when you make a losing pick. You lose money, But this is, anyway. All right. So let's see what else do we have here. Yeah, calling BS on the market. Oh my God, that was the video, and it expires in 5 hours, and it's $3,500. Now this trade was so aggressive. That's why I did these one a little less risky, bearish YOLO. But yeah, this one was the most aggressive, and look, it's up $3,500. My gosh, look, this trade. When this trade was it was a straight debit, I guess. It was just a straight debit. So it was a $500 shot at lower prices. No income or whatever, but those kinds of trades too. But if you did that one, You risk $500, you're up 3,500 at this point. The only thing that can happen from here to you is bad, or you have a 50-50 shot. Yeah, it can keep going up, but also you can see your 3,500 turn into 2,500. Take this off the table right now. Quit watching the show. Take this off the table, and if you want, if you're still bearish, reestablish. Go out till Friday and move the puts down and reestablish. Spend about 500, and you may have to spend more because volatility's up. So if you have to spend 750, that's fine because you have 3,500 in your pocket to play with. So spend 750, spend 1,000 if you have to. But even if the market, if you're still bearish, but even if you're wrong, you still made 3,500 less the 1,000 that you rolled into the next one. All right. So that's what I would do anyway. Hey, Grateful Trader. Hey, Dan, how are you? Yeah, Jax hasn't been he hadn't made much of an appearance this morning. He's kind of sleepy. So Grateful Trader has some funds he wants me to look into. So was it that WEEI? Is that the one? There was a fund. Have you guys heard of this one? We'll just take a look at it real quick. Let's do FinViz. WEEI. It's an income fund, but I need to do a review on it. It doesn't pay like a huge income or whatever, but it's an income fund that also invests in the oil and gas pipeline business. I think like limited partnerships and stuff, but it doesn't have but it's the kind that they made an ETF out of it. You aren't like a limited partner, but so and invest in that is kind of the underlying. But then it sells options. Anyway, it's an interesting thing. So the trailing 12-month dividend is about 10%. I was thinking 10%, so 9%. So you're in the industry business. So here's their top holdings. Well, let's see. So I was wrong. It's not. I thought they had a bunch of pipeline limited partnerships and stuff, but maybe they do in some of their smaller holdings. But anyway, no, it looks like it's just energy. Exxon, Chevron, Conoco, Williams. Anyway, so you get these companies plus a 10% dividend. I mean, year to date's up 4.71%. I don't know. I just found out about this yesterday, but I would just make the case that if you want that kind of exposure, why not get a bigger dividend than 10%? Right? I mean, I think you could you do something similar with this? It's down 9% year to date, granted, but it pays a 67% dividend. It's whatever. I mean, I guess it depends how badly you need the yield. But I stacked USOY and here, look at this. Let's look at where in the heck is this? The big dividend can come in handy, and you can't really look it on FinViz. You have to. I was going to show you something else. Market's bouncing here. The SPY is close to the highs for the day, or those are. Hang on. It might even be past that. I think these are a little bit delayed. Let me look at SPX is live. Yeah, no, we're trying to get back into the gap. The bulls are fighting to get into that gap. All I was going to say about this WEEI, I got one more thing to say, then I'll look at your questions or whatever. I'm trying to bring up a comparison. WEEI and USOY. Okay, well, you can see that USOY has a lot better total return. So you can't just look at you can't look at FinViz, you can't just look at anyway, it's whatever. But either of them would probably be a decent way to play You know, if you can, it depends on your portfolio. Either can probably be a decent way to play. All right. What else are you guys up to? Hey, Charles, how you doing? Adam, thank you for being here. Good morning to you. Stocks play usually higher divvy. Yeah. Might have rolled options day to look into. Yeah, exactly. No, it's probably all it was. It's probably all it was. That one position they didn't have stock. It was probably just that. Who knows? I'm just saying, why don't they just do that? All that they could do that. And I've asked Jay, and he told me the answer. He said they could do it like that. Even if they did, it wouldn't be what I'm thinking, because they would still do it as if they own the shares. Because I'm thinking you could do it and get a little bit more leverage. You don't have to own the shares, and you get a little bit more bang for your buck. I mean, but he said no, they wouldn't do it like that. They wouldn't take advantage of the anyway. That's the way a small account would do it. If you don't buy the shares, just do a call spread. Just selling in the money call spread. I mean, anyway, Charles knows all this stuff. For Charles, I mean, there's no telling. Alti's down. Yes, Alti is. I mean, well, let's see. Let's look at Alti. Maybe it's bouncing now. I mean, I'm showing it down 2.2%. Let's see, Alti's last dividend. You would expect this. I would expect this last dividend to be, well, its last couple of dividends to be more. 9 cents. 9 cents. 10 cents. Yeah, but Alti's down evidently. I mean, it's probably going to get uglier before it gets worse. All right, Adam, you're curious how Granite shares YSPI will do? Yeah. Yeah, me too. Well, probably anything that's bullish, it's not going to be doing great. But these things should pay high dividends, though, because the dividends are more a function of the volatility. So yeah, but it, I don't know. What's Charles saying here? I wish I knew, Adam. We'll keep an eye on it. All right, Charles is saying only so much premium in SPX to sell. A covered call fund based on SPX are all going to perform in the same general ballpark. Yeah, premium. Yeah, good call. Good call. What's this? All W and Foxy, Grateful Trader. Let me look into that. I heard about Foxy this weekend. I'm trying to think. It was Tom watched a video on it, I think. Foxy's considered a liquid alternative. A lot of these are. I think they trade Forex, or it's a futures trading or something. Or currency strategy. Okay. I think any of these things that do futures, like the VIX ones, like SVOL and ZVOL, they do these future strategies. They just do future stuff, but they do future stuff in a way to take advantage of time decay. Futures have time decay also. It just works a little different, but they take it. But I think on these future strategies, they take advantage of differences in timing or pricing between different months. But anyway, yeah, it depends on the managers. Look at this. It's been great lately. Boy, this one picked a good time. This one, I guess, obviously is defensive because it's up when the market's down. But they went public here at the 1st of February. Oh, my gosh, yeah. Heck yeah, that's a good one. What am I doing? I should have made a video on that one this weekend. Anyway, okay. Well, whatever. I made a couple of videos, but and I'm working on another one yesterday that I didn't get done. on volume profile and market profile and order flow trading and a bunch of what I think is interesting stuff. But I bit off more than I could chew. I mean, I'm working on the slides, and it's going to take longer for me to get that one finished. Okay, so this is the all weather. So this is Bridgewater. Yeah. Okay. Well, heck, what's not to like? What's not to like? I mean, heck yeah. Let's see what this thing has in it. All right. So it has some 13% spiders. I like that. You gotta love some spiders. I mean, that's the growth component. And it's got to have some hedging in here too. Then it has some emerging market spiders that have that have held up better than these spiders for sure. So it has some of those. What's that? 4%. Then it has some treasury inflation adjusted, whatever those things are, the tips or whatever. Nice. Yeah. That's a nice one. They're just turning everything into ETFs, whatever you're interested in. I'm just not interested in the Ray Dalio philosophy. I mean, it's great, it's whatever, but I'm saying I'm interested in it, but I'm more interested in other people's philosophies. But they made an ETF out of anything that you're interested in. They've ETFified, the ETFification of America. So I mean, and I love it. It's just such a great time. I just can't, I just can't keep up with all of them. I just like to specialize in the ones that are specifically doing stuff like I like to do and that I know a little bit about is just selling options. So the covered call and especially the ones that are doing the daily options, those are for me, the most fun to follow. And like Alti and GPTY that are doing strategic type stuff. I like that. I like how GPTY has a constant hedge in there. Now, here's my question though. I mean, you can like the hedge all you want, but has it helped? And this would be a good time to test it. I need to make a video, and what I need to do is compare GPTY maybe to FEPI. It's similar stocks, and maybe go back to the day that the top of the market, which was basically the day I established my model portfolio, December 20th or something. Let's see how it's held up against FEPI. Now, it's not a totally fair comparison because FEPI sells options in the monthly time frame, which in itself is a little more conservative. So, and sure enough, FEPI has done better than GPTY, and that's even including GPTY's put hedge. GPTY at all times owns Q options and Q puts. And so that should dampen the downside. But what should I compare? Let's compare GPTY to the Qs. Well, it looks like GPTY needs to work on their hedging strategy a little bit. Anyway, but I like the theory of it. Let's just say that. Charles says, if you can add extra each month to share volume, buying it up, allow general market funds are good. Dollar cost average has worked over time. Yeah, good advice. ALW is a handpicked. Yeah, I mean, it looks great, and you can tell it's doing great. Whoever handpicked it is doing great. The guys at Bridgewater are awesome. I just want somebody to come out with a freaking. Why doesn't somebody have a long volatility ETF, a truly long volatility ETF? So you could really do the Dragon portfolio. To do the Dragon portfolio is doing great lately also because it's 20% gold. That's doing great. It's 20% long volatility, which is doing great lately. So there's some markets that long volatility is the only thing that's doing great. They talk about all correlations going to one, right? Well, the one correlation that doesn't go to one is volatility. It goes the other way. It's the one defense you have. Market looks great. This SPX is just running into the freaking gap. If it can run right through the gap, the faster it can get through the gap, that's awesome. Now, we got to watch out for it to get right to fill the gap to the penny and then turn around. But anyway, but it's still better than what it was doing this morning, right? But yeah, I agree wholeheartedly with what Charles is saying. But yeah, if I was looking for a core holding, let's say I just won the lottery yesterday, and was looking for a core holding, yeah, all W might be a good one. Yeah, heck yeah. Or looking for some growth assets. That might be a great one. Might be a great one, but I'm telling you what, I mean, I would do the same thing. I would also get some YQQ even now, but also some Y SPY and also some QDTE or whatever the hot index-based fund is at the time. I mean, there's a lot of good ones. There's QDTE, there's triple QT, you guys know. All right, well, I guess I'm going to get out of here, but I just wanted to get on here. But especially now that the market's rallying, if anyone did any of those trades, take them off. If you're still bearish, that's fine, but roll them out. Don't spend as much money as you made, and then you're fine. Nothing bad can happen. As you made on this one, put some money in your pocket, take your wife to dinner, whatever, do something good, and have a good day. I'm going to get out of here, and I'm going to go work on some content and stuff like that. I appreciate you all for being here, and I hope you have a great day. I will talk to you later.